Alright, hello ladies and gentlemen. Welcome to the Economic Weekly. Today's topic is interest rate. In the past few years, China's economy has emerged a phenomenon called negative real interest rate. It's one of the main reasons driving China's economy to an overheat status. So in this session, I'm going to explain the effect of it and the action of the government will take to solve the problems. Okay, first of all, I would like to identify what is real interest rate and how it becomes negative before we go. We take a look on this formula first. It's invented by a famous monetary economist. His name is Ian Fisher. The nominal interest rate is what we call the bank interest rate or the market interest rate, and it is combined by two parts: real interest rate and anticipated inflation rate. Real interest rate is the real gain from lending money, and the inflation rate is used to compensate the lender from loss on inflation. Up to now, I think you almost understand why real interest rate become negative, but we still need to go through this case. The bank interest rate is 5%, and we expect the price level in next year will have 6% increase. Therefore, the real interest rate is negative 1%. That means you will have a diminish in your deposit after 1 year. It's what we saw in China. So what is the effect of it? How can it affect our economy? Just ask a question to yourself. What will you do if you need to pay interest back to the bank after you deposit? The answer is obvious and easy to understand. You intend not to push too much money in bank, and where the money has been? Definitely consumption and investment with high money return. So you can see the consumer price index and stock index has been pushed up rapidly. The general price index indicates the purchasing power or the living standard of an economy. It's unhealthy to maintain the price level in high level. It's the problem about the public livelihood. Also, the overheated stock market attracts a thousand of capital inflow. It's dangerous to people who place a lot of money in the market. And once the stock market collapses, they lose all their capital and the economy will depress at a quick rate. As the above mentioned, we can see the main reason of having a negative real interest rate is high inflation rate, and the effect of it is to push up the price level. Therefore, it is a vicious circle. The China's central bank must take action to reduce the damage. And it is called the micro regulation and control, which we already heard from the news. It includes contractionary monetary policy. Government reduce the money supply in market by selling securities to public, raising the bank reserve rate or discount rate. This reduces the market interest rate, and finally, the economy can be cooled down, as well as the inflation rate. Other methods directly increase the nominal interest rate and levying stock tax, etc. However, as the return of the stock market is really high, a positive real interest rate cannot attract people to put their money back to the bank. The government must use number of control at the same time to cool down the economy. But I think if we need to keep the economy stable over time, education is much more effective than the above methods. Government should educate the people how to invest and how much money to invest, and make sure they always get the idea on their mind. Okay, the time of our program is short, so goodbye and see you next week.